Hey, all, welcome back to Swing Trading. My name is Mike Fairborn, Senior Manager Trading and Derivatives at Charles Schwab. Hey, today I want to take a look at really trying to put time on our side when it relates to some of the option swings that we can do out there and simultaneously try to capture some leverage to what those options can provide us. So, really wanted to look into that today with you as we address current market conditions and seeing what may be out there. Hope you are all having a good day, folks. I hope you had a great extended weekend. I sure did. Enjoyed some time, but yeah, I got a bike ride in yesterday. But I'll tell you what, going up the mountain into the wind, that was I would say that wasn't a double workout. That was more like a triple workout. Of course, coming down the hill with the wind at your back was made it all the worthwhile at the end. Didn't have to really pedal. I mean, at all. But anyways, good to be with you guys. Hey, welcome. I recognize many of you here. Hello to you, Kelly. I missed some names coming through here, but hello to you, Will. We've got KB, Michael, Tammy, Jonathan, others, Bryceberg. Welcome to you guys, Mighty Mouse and Tatiana. Folks, any questions, comments, you have to throw those in the chat so we can address those for you. In this class, we do address that shorter term time frame within the markets, generally that 3 to 15 to 20 day time frame, trying to find the strongest segment of the market within the trend. And we've been seeing some really interesting consolidation in the market. So we're going to tie that in a little bit, but love to welcome here a good friend of mine, a very good friend of mine, Mr. Brent Moores. We've worked together for coming up on 20 years. And so, yeah, we've been around a little bit, and great to have Brent on board, folks. Any questions, comments you have, again, throw those in the chat box. Let's get started with some disclosures to get going here. Information here is for general information purposes only and educational purposes. Now, options carry a high level of risk. They're not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. A short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Now, the paper money software application is for educational purposes only. Investing involves risks, including the loss of principal for some products and strategies. Loss of more, yes, and loss of more than your initial investment can be the case. Now, there is no guarantee that execution of a stop order will be at or near the stop price. Past performance is no guarantee of future results. Dividends are not guaranteed. Final disclosure slide, just looking at futures here, folks. We don't dive into futures trading, but we do look at the charts. And so I just wanted to show this to you. Futures and futures options trading does involve substantial risk, not suitable for all investors. Now, here is a look at the S&P 500. And what do we have here? Well, we have much of the same. You guys can still see the two lines that I have drawn in there as kind of a, well, not kind of, it clearly is a consolidation range, as you can see, coming through here, holding off that big level still at that 7,000, folks. We bounced off that bottom today. It is not the first time we've bounced off that bottom and near that 6,800 marker, or I should say level or range. We've done it just a few times, and that's one key reason as to why we do have this listed here right now. I mean, in other words, as a support level, potential support level. And we'll see what we do get from here. But when we are getting this kind of consolidation in the market, it is interesting to kind of keep eyes on it because we are looking at the 500 here, the S&P 500. And, you know, that's just a combination of a lot of stocks that have been in a sideways channel. Now, what I did do, and I think I mentioned this to you guys already, but I did put alerts on here because I did want to try to be notified of a breakout or a breakdown in the markets just to see what in fact might end up happening at this time. Just wanted to state too, because I did do that, alerts aren't guaranteed to be delivered or delivered at any specific speed or time frame and should not be used as a replacement for actively being aware of your positions. Now, having said that, my alerts have worked very well for me, but yeah, I just wanted to state, you know, you're not guaranteed here to be notified. Of course, you can do that just by right-clicking on the chart, going down here and selecting create an alert. Just make sure that you have the mobile set up down below. If you like to be texted or try to be texted, that's what I do as well. And again, you can set that up in the setup section, application settings up top here, folks. Notifications, throw that guy in there and you'll get it. You'll get notified of that. But this is what it is quite interesting because we are nearing that 7,000 level. We've been there for a little while. Of course, there's been some clear solid indications of pinball actions between, you know, basically a 200-point range in here. And you say, could there be some weakness in here? Well, anytime you're staying in a sideways channel for so long, kind of similar. And I mentioned this morning as I was covering JB's class. These triangles are in place. That's a symmetrical kind of an idea of a triangle. But these price patterns do tend to indicate that coiling up of price right through here, and they can be explosive. And even though, yes, literally, we're approximately just 200 points from all-time highs, we could still see a big move in here because we've tightened up. We've gone into a range, and we're getting a fair number of stocks that are showing that. Now, just a quick note, you can get above a high that might have been a consolidation range and start to potentially bounce from here. And that's really, a question. Will it bounce up? A lot of times, of course, traders will look for a continuation of the trend to the upside, right? Higher highs, higher lows after a sharp move up and a consolidation range in here. Looks like a bull flat or a bull flag, maybe through the eyes of a lot of traders here. But the real question is will it be, and what kind of a move can we anticipate seeing coming out of this range? And so we want to be looking at the possibility of a downside move. I talked a little bit about this on Friday. VIX greater than 20 can correlate with a lot of sharp moves to the downside. It's inversely correlated with the S&P 500 as the VIX shoots up higher. You want to watch that. Of course, anytime we break above highs here, that could be watched as well. And we have had some interesting economic announcements. There was some economic announcements on inflation that were bullish. We saw some non-farm payrolls that were also quite bullish, economic bullishness. That favors the upside, folks, but it remains to be seen what we get here. In the meantime, we can look and find strength in what also might be positioned, perhaps, as a breakout, but not just using stock, but maybe looking at some longer dated options that retain their value a bit longer for the possibility of a swing trade breakout, still using some same correlations. Now, we've mentioned this before. The whole goal actually through last week was to discuss it in this class. I had to film it for JB's class, so I talked a little bit about it there. But tapping into some of these indications that would come from a tighter consolidation. This is the TTM squeeze. I meant to add it there. Let's just pull it on. I'm going to kill these guys right here for now so we don't have too much going on. But there's the TTM squeeze. Now, there is a histogram in here. That can be looked at for sure, but I'm really just looking at basically the price pattern and movement coming out of that range right now. Okay, and you can see it right there going sideways. Now, I did develop a special script for you guys for this class to kind of track these longer term. I did have the scan this morning. I've also got a Market Watch column as well that I can share with you showing you this. But this indicates that there is some price compression going on because we have the Bollinger Bands fitting within the Keltner channel. And remember, the Bollinger Bands can be used as a price compression squeeze, and so too can the Keltner channel, but it becomes even more interesting in a lot of ways for many traders when you get a rare event, and that is when the Bollinger Band even compresses within the Keltner channel. And you'll see it from time to time. This happens to be the current condition of the market as we are nearing a bottom and seeing a bounce. Will we break up from here and touch the top? Will we break up through, or will we just come back down? This is the question. But when you get compression like this, what it means is a magnitude of the move. It can mean that. It doesn't, nothing's 100%, but that's what traders would look for this for, like a Bollinger Band squeeze breakout. This is just an extra level because you're compressing within the Keltner channel. We've talked about it. I'll show you guys a link that I discussed too within my ThinkScript class on this, but for more details on it, but I wanted to tie it into some specific class setups today, some topics. All right, so I wanted to hit that in detail first as we go into this, but kind of give you a heads up of what we'd be looking at today, because not only do we have basically a price setup in terms of a move to the upside and consolidation, like a bull flag or a bull flat, It's been very flat, even going up a little bit. Actually, signs of strength in that consolidation, but maybe some insight into the magnitude of the move because it's compressed for so long. Break up, down. That's what we want to look at today. So we're going to dive into that in more detail. First, though, did you notice on Friday that our trade, our KMI trade, did hit its target? So that was the swing trade for KMI right there, which interestingly enough did come out of a price compression zone as well, the TTM squeeze. We saw the Bollinger Band fit inside the Keltner channel there, indicating, hey, we might be on the verge of a bigger move. And after that happened, we broke higher and then we just trended. That's the kind of magnitude move that can follow these kinds of setups. And that's what our discussion is going to be on today. But we're going to be looking at options so we can gain some leverage. Now, the reason for that is kind of twofold today as well. When we look at options and we look at leverage, a couple of different things. The markets are at a high range. And if they did break down, things can break down quickly. We don't want to necessarily be participating dollar for dollar to the downside with a stock, whereas an option, a long option, has defined risk. There is risk on a stock too, I mean, all the way down to zero, but controlling that risk in case this consolidation on the S&P 500, folks, happens to break sharply lower, we're exposed with, potentially lower theta and basically a liquid option that we can get out of with having too much exposure to the possible downside, but also being there for the leverage side to the upside if it does break out higher from the option itself. So that's the plan. But that was our trade for last week. Just to show you now, why we put this trade on initially was this long-term consolidation. You'll see it over here on the weekly. This was really a long-term. In fact, if I were to throw the compression TTM on a weekly here, very, very likely that we would see it for several bars holding up in here. Okay, that was the breakout, and that just gives you actually a visual of what can happen in a compression zone and why sometimes, because really a lot of what we do, really the foundation of this class, are price patterns. In many sense, they are bull flags. That tight range can mean explosive moves, and we got it there. That was the T2 that we got filled right there. Okay, and you can see right there, that was our initial swing. So measure the move of the upside, pull back, not the T1 target, folks, but it did hit the full T2. All right, that's what we had for that. Now, so let's do this. So this was the scan that I shared earlier today. It is the TTM squeeze. I redid this scan a little bit, and you can see it pulls up about 53 stocks currently. It actually pulled it up, I think it was 53 this morning as well. Yes, it was. And all we're simply looking to do is find out what companies have been in that tight range and maybe setting up for the breakout. But instead today, we want to use those longer dated options to get that leverage potential, but also defined risk as well. So I'm going to share this first and foremost with you so you guys have it. Again, these scripts aren't guaranteed for timeliness or accuracy. This is the TTM squeeze scan. We've talked about it before, but it's just maybe timely in the markets right now, so I don't want to miss it as it's setting up. It's not always this case because a lot of times the markets, they have been trending. But as of late, yeah, there's been some consolidation. So there you go. Exactly. Thank you, Brent. Not guaranteed time or accuracy on the scripts. I will say this, though. As long as the data that's flowing into the platform is good data, and that's been my experience, then the script should just act in a mathematical format to get you, what it says it will do. All right. Okay, but with that, yeah, not guaranteed for time or accuracy, but here you go. This is a list of what we've got. This is kind of just a look at the scan. And one quick thing I wanted to note up top here, you guys can take this and you can adjust it very quickly. I put in here a minimum squeeze days, folks, of 3. If you read, postings on this or the writings from a lot of the technical writers and analysts, you're looking at least 3 days. Now, this does not give a max range. In fact, one of these is up to 39 days, which is just very, very rare. but 3 days at least. So not 1 day, not 2 days, just kind of as a blip. What we're looking for is a decent price compression here so that we can look at a longer dated option for a potential move to the upside. This is one we were looking at earlier. Now we're going to add to many of these, and the difference here is it came up right on the list. In fact, it's right at the top of the, well, it just happens to be here. I think this is organized based on 5-day percent change, but not choosing it for any other reason, just as an example here, but NXPI. NXPI. Now, this is an example of one that has been breaking out. This will add to the list. It'll be on it and it will fall off because it's actually showing potential for that price compression to start expanding, coming out of its range. Do you see that right there? So it was red for an extended period of time, like 13 days or so. Now it is green. And now, even though, okay, so the market's not closed, so it's not a close above the high, the low day, but it might stand there. You can see that we have broken up higher and we are holding this support level right now at this point in time. Now, it's an expensive stock. So I want to show you how we can use this and show you, just do some theoretical numbers to see it, show you what it looks like as well. But a couple of things on here. We have a pretty interesting level for potential exit point. We talked about stops initially, and a target. Look at this. You can see there is a potential flag developing right there. It's a mini flag, but that's okay. It's already starting to bounce. There may be some key support right there. By the way, that extends all the way over here. So we're showing strength ahead of the market in a consolidation right now. And so this is one of the stronger semiconductors right now. We'll see what it looks like, but it does suggest through the TTM that there could be a larger than normal magnitude type move. Okay, that is one flag potential. There is another one right here, because I can tell you right now, if I look at this, this can all be seen, I'll show you a different color, as a consolidation, kind of like a flag pattern. Now, it did dip all the way down here. So whether we're taking this range and we're adding it to the bottom here, taking us close to 280, or we're taking this range, do you notice how similar these two are in size? We're getting a little symmetry here. So is it from an earlier swing trade? Is it from a later swing trade? That's the question. Will it move? It's suggesting that there could be a big move from here. But, like I said, markets are in a funny position. We're so close to all-time highs, but if we start to break down, kind of like the NDX has done a little bit, but look at, we're still holding. But if we were to break down, it could be a sharper move. NDX being kind of a read on technology here. So what we're really kind of looking for is a trade to maybe position us where we're going to have maybe some risk control, a defined risk, but some upside potential as well, and some leverage there too. Okay, so let me show you how we could do something like this. So we can go out, and here are our ranges that we can look at here. So a lot of times what traders will seek for is they'll look for something like a 4-month to a 6-month range. Okay, so let me show you what that looks like over here. Here's our 4-month. Well, this is actually out to June, so it jumps out a little bit further. I still want to look at April's here as well. I want to show you guys something as we look at this. Now, as you come over here, and we take a look at the open interest, it's starting to pick up a little bit. It's in the hundreds. Now, it's a high-priced stock, so you are going to get a range in here. It's not as tight as some of the others, but I'm going to highlight this and show you what this looks like. Now, here are the Aprils. A little bit tighter here. I'm going to stick with an April for now. So we're looking at March, April. We could go out a little bit further, but the whole idea here, folks, on these moves is to really kind of stifle that theta. We want to keep the theta low so we can get the leverage and give it time to kind of bounce a little bit. Now that is 13 cents over here. Come over here and look at this one with me. Okay, if we just look at this. May, June, so this is going out into the range, the further range, and you can see this over here. That's 10 cents a day, even at higher price levels. Okay, so that is at 260. If a target over here was 280, you can see that that could still run 20 points higher from what we're looking to purchase now. But this is going out of the money. I want to talk about delta right now because this is how a lot of traders will look at this. Instead of going what we would normally say is out of the money here, look what happens to our theta when we go in the money and we try to get more bang for the buck, so to speak, with the deltas over here. The deltas are kind of inching up towards 70s, in the 70 range. Now, I realize it's shorter term, so going out 59 days to 121, that's a big difference. And we're just not getting over here, as you take a look at it here, into April, we're not getting, well, the spreads are actually quite similar going into this range here. There's still a little bit of band. I want to tell you what that difference looks like. Now, a lot of times you can shoot for the mid-range here. Some people say, there's no way, Mike, I'm taking this. But if you're dealing with a swing trade that might be extended up substantially higher from where we're at right now, it could be a consideration. Let's go through the numbers just so I can show you this. We'll do this first because we are going a little bit lower here on the I'm going to try the June first. I'm going to go out the full time frame and we'll look at the 72 delta right there. That's a 220. This is what this does. We'll choose some other trades here as well that aren't so expensive in just a second, but there's the 220 right there, or I should say so pricey. Now, if I shoot for the mid-range there, somewhere around 39, okay, what do we get under those two conditions? So I'm going to go down here and we're going to take a look at our theta right now in our Theo price. Oh, by the way, a quick note on delta. Delta measures the amount that this option range will change for every $1 increase in the underlying stock. Let's go over here right now and take a look at it. So we've got a 72 delta. So for every dollar that the stock goes higher, the option should increase by the amount, or this range should increase by the amount of 72, or about 72 cents. What happens when it does go higher and higher? Look at the delta start to increase. It looks more and more like a stock. Okay? So watch this. If we go over here, I'm going to go ahead and just see what this category looks like if I use, I'm going to customize this. I'm going to throw in the Theo price because this is how a lot of these trades are used. There we go, Theo. In terms of expectations using options, taking on more time, trying to make it, it's not a stock by any means, and it doesn't become a stock, but that delta does increase like a stock goes dollar for dollar. You can see it does go higher. So I want to make that point clear. It is not a stock. It does have time decay for sure. This is an in the money trade though, for a call option, and we're looking at about a 70 delta. Now, if I drop this down and I look at this and I say, well, I don't know if it's going to move here, but I'm going to give it quite a bit of time. In fact, I'm going to give it out to maybe hit a target like that, 280, out maybe, 20, well, I'll just show you this. I'll even give it like 25 days, or in this case, calendar days, maybe, what was it, about 30 or so? The range, 34, 35 days. Okay, so we're going to give this more time to unfold, show you how this works, and this is going to give us a theoretical price for that option. So if I come over here and I go out, let's see, what am I in July? Yeah, so it needs to go out further. We're looking at March, about towards the end of March. That's quite a bit of time. We're looking at, scroll on down, find our March, and okay, we got that down, and it didn't go. March 26th. I got to click on it. Okay, so let's just go a week past options expiration, quite a bit of time that's gone by, right? Now, on a standard option, you can anticipate that theta really having a massive impact. An option of 30 days would be expired, but even like 50 days or so could really take a hit as well. Now, the price adjustment from here, we're at 245. So if we went to 280, we're looking at about a 35-point move. and you can make all kinds of adjustments in here as you do this. But that's what we've got thus far. You can see this setup. So over quite a bit of time, more than a month, if it does go up and break up higher here, what does this look like in terms of our Theo price? Right here. What was it? So it was the 72. So here's your range right there. So even after 35 days roughly, it's actually more than that, wasn't it? Well, okay, we'll just say 35 plus days, basically, we can look at it. In fact, I can get the amount of days just to be specific so we have it down. But I'm just saying in that range. Today's what, the 17th? So we're looking at the 27th of March. So quite a few days out, calendar days for sure. Even with the impact of that theta, which is 9 cents a day, with the higher delta, that's the price range we're looking at right there. There's your Theo price, about $64. I'll just say, I'll round it down to $64.50 approximately, okay, over that time frame. Now you can adjust this approximately $64.50, okay. Now, do we have some benefits in terms of the cost to put on the trades relative to stock? Absolutely. What does it cost us over here to put on that option? Well, if we're putting on the option here, and we're going to put this in, and we're just going to say at 39 even, if we can get something like that on a fill, it does have 100 in the 100 range for the open interest. But if we looked at that, yeah, you can see over there, $3,900. Now, this is on an expensive stock, just an example. But conversely, we delete that and put us in over here at a trade and look at this one. Well, that's 12,000 and change. What is the impact if the price of the stock begins to drop? If it drops and drops and drops, actually that delta, changes as well, right? There's a little bit of an impact there on the delta as this comes closer to the at the money, and the theta is not moving as much, and we just don't have nearly as much of an investment in place either. Now that's going out 4 months, and that's how you do that. I mean, that's how you can manage this, right, on a trade like this. So let me give you, I want to look at it a completely different way as well. So if we put a trade on like this, and we're looking at a 39, let's do this comparison as well. So 39, we're trying to buy it for 39. What is our break even on this? It's $259. $259. So park that in your mind. 259. This is another way to look at that leverage. Over how long do you have over here? I'm going to show you this. Let's just do this over here. Let's go time, and I'm going to push this out. Gosh, 100. Let's see, 150 bars just to be safe. Look at this. So this is way out here. So if we're looking at this date in June, right over here, I've just tried to put it maybe near the monthly expiration towards the latter half of June. How high does this stock have to go to hit break even by there? Folks, not a lot. It has to go there for break even. Does that give you some time to let the stock move? Now, this is an example, but this is a lot of time, right? I mean, generally compared to what we look at here, but we're using this, because we're kind of comparing it to what stocks do, which are completely different. They don't have like an expiration date, but this is a way to capture that leverage. We saw that it does cost less to put the trade on. Of course, there is an expiration, but your break even's just there. Now, could it run higher? Sure, but the trade is up to that level, about approximately, as we saw at that price right there, approximately $64.50. Now, that is trying to use options where we're trying to make time not, play such a big role. We're trying to keep it on our side as much as possible, because one of the big impacts of options is that expiration. So, like I said, 4 to 6 months or whatever. This is actually, this is plenty of time. 1, 2, 3, 4. So there you go. It is actually 4 months there. Okay. So that is setting up, waiting for it. And sometimes when you have that long consolidation, some people might put on something like this because they're saying, gosh, over 4 months, I think I can get a breakout. if that's their anticipation of the upside. Anyways, that's how that could look. All right, that was a lot of discussion here, but I had to go through it. Now we're going to zoom through a number of other examples here as we do this. But I'm going to go back here again. I'm just going to show this to you so you guys, we can keep tabs on this, because I do want to put an order in here. And I'm just going to do a, yeah, we'll do a bracket order on it. Oh, yeah, that was the one I was after. Yeah, okay. So good till cancel. We're just going to do a single option contract here. All right. And what we'll do is we can set this up for now. I can go a lot more in depth on this in terms of the trade itself, but I'm thinking approximately around 37. We're going to put this at 39. I know it doesn't have like the greatest liquidity in the world, but it is an example for all the others that you can look at. It just had an interesting kind of a price pattern setup. That's about 64 right there. Okay, good till cancel on these. Let's just put this in and see. Now we're going to take a look at some others in here. Didn't get a fill yet. I had it in for 39. It's not quite the mid price. Of course, it's going to try to set it at the mid. I should say fill it at the mid if I were to go like a market order, but just for now, we'll keep that there. Okay, but you guys get the idea. Now we can do this on any sort of a trade that has options and we're looking for that liquidity. Let's do this one as well. So here is a company that came up on the list as well. Here is AbbVie. Now AbbVie already broke above a key downward sloping trend line over here. I'm going to narrow this down a little bit so we don't have as much time frame over here. In fact, I'll just go back to where we were, about 25 days in the future. There we go. Give us more time to look at the chart. But you can see this too. It came up on our scan. It's in a sideways range, folks, in terms of price compression. Does this look like the possibility of a longer-term breakout? Well, we're just breaking above this trend line, and that sometimes can lead us ahead. Let's look at these options on AbbVie. Still kind of in the $200 range, but let's pull it up right now and I'll show it to you. So here are the Junes over here. You'll notice that these are a lot better, still about $1 wide. I'm looking, okay, there we go. So right here, about a 74, no, there you go, about a 66 delta, 66 to 60, 60 to 70 delta is what we're looking for. So let's mark that down. Let's talk about this right now. So the options that we're focusing in on in terms of time to try to take advantage and not let that time be too impactful, and instead leveraging that swing with some time on our side. Time, we're looking at 4 to 6 months in terms of the option. Now, we think that the trade might still unfold within 3 to 20 days or so, up to a month, but 4 to 6 months, and our delta for the calls, these are all calls, is going to be at what? 0.6 to 0.7. Now you could go higher if you wanted to, but we don't want to necessarily go any lower than that because we want to have it kind of, impacting our range. And there's the fill right there. So we want to have it, kind of moving with the dollar movement, right? More of a dollar, closer to $1 for dollar move. And like I said, that can increase as prices go up. So let's go back over here and let's take a look at this one. All right, so coming over here, let's just compare this right now, and I'll show you what this could look like longer term. Yeah, if this was the swing trade right there, it's a very, very big move. We're coming out of it right now, so it could continue. The interesting thing here is there might be a little bit more time to hit a level if, in fact, it's ready to break out. It's certainly giving us that indication of a possible magnitude move right here. The difference here is notice we had this compression here, but we didn't break out. We are showing price signs here, so there could be the possibility of a breakout. That's the question. Now it could go down as well, but let's just see what this looks like on this trade. Here is our 60.66. Right in here, and you get a 22.50 to a 23.90, closer to $1, not quite there, but let's do the same thing over here. What are we looking at in this range? And this is where you kind of need to go in and make these projections. Let's do that right now. So here is off the bottom to the top, and we're going to duplicate this, and we'll just pull it over here so we have an idea. of where that goes. So it's about 260-ish. I'll just say 260 to the upside move. So where are we at right now? 233. Folks, that's a move. That's a move of roughly 28 points. Okay? But instead of buying the stock, which is quite expensive right now, we're going to come over here. We're going to right click. We're going to set up well, before we do that, let's do the Theo price on it. So we're still going to give it that same amount of time to move, but we are going to be looking at that same June contract here. So let's see, we said about 28 points, 28 and change. I'll just say roughly about 28, a little bit less than what we had. So there's a 28-point move. What does this do to that option price? Okay, so the price of the stock didn't go anywhere near a double. Post theta, even after theta, for those days, you can see right there that it's still up. I mean, it shows 43 right there. So anticipated rate in terms of anticipated price, I should say, 43 approximately as the way it stands as we're looking at it right now for return on that. So that's, if we get it somewhere around even 23, it might be approximately about 20 points, right? You're getting close to a double there post this level. Now let's just put it in so we can see this. Is this resonating with anybody? You guys seeing this? Going out a little bit more time can help quite a bit. In terms of the theta decay, we've been used to seeing theta literally do this. When we do options in this class, after the 30-day time frame, it starts to really shift. In the 20 days, it just kind of falls off a cliff, is what theta decay looks like. But when you're back over here, okay, I didn't mean to draw it like that. It is still coming down over time, but it's so slow. This is the impact after theta. Okay, I just want to emphasize that because I don't think maybe you haven't seen this before, but good tail cancel, good tail cancel. We can set this up higher. Now, by the way, I set this up at a higher level, but yeah, I mean, it was like 43, I guess. I mean, that's for the full target. We don't have to take it off. We can take it off before that time, obviously, but this is what we've got here. Now, quick note. What do we have here? Now, in terms of the break even, I think this is so important to take a look at here. Why isn't it calculating our break even for us? Does it do it just with this alone? Let's just do this. Yeah. Let's just click on the buy. I just want to get a quick calculation here. I'm just going to say try to buy it at 23. We probably wouldn't get it there, but just as an example, make it easy here for us. 243. So that is break even at expiration, right? 243. Let's look at this on the chart right now. So where are we at relative to that break even? What does that price have to do going all the way out to June? Folks, it has to go this far approximately for break even. But we're not looking to just break even here. We're looking for a higher magnitude move, not just the price pattern, but the TTM squeeze, which oftentimes can show, a higher magnitude move, which is why traders will look at it. But I really wanted to emphasize this portion. It can be really, really small relative to what we are in fact looking at, okay? What we're looking to get. So let's go ahead and put this trade on as well. So we've got this, and then we'll look at a couple of others, and I want you guys to start looking at some of these, but as we go through this, but on the scan that I'd sent out to you. So let's do this. We'll go ahead and just put this in, and we'll go good tail cancel, just a single contract here. We know the target because we had our prices in here set at that level. I'm going to knock this down to about 20, okay, in terms of the stop level. And this is what we've got. Just read that order. Still doesn't want to calculate our break even yet. That's okay. Let's go ahead and send that through. And we got it. Okay. So it's actually filled at 23.10. I just left it open, and there you have it. So you could say, yeah, it's kind of a wide range, but remember, if you're getting any kind of a move, you could be positioned. All right, so here you go. Let's go back to our trades here, folks. We don't have to go with these stocks that are really kind of high valued either. You can get a shorter range within, a smaller price range to be looking at as well. But take a look at some of these. In fact, I already have this set up over here so you can see this. You know, once you do save this in your list, you can actually pull it up over here too. So it will show up in the watch list. I think many of you already know that, but the TTM squeeze scan right there, there it is. I saved it, and now you can have these updated every single day for you. Just go in here and click, and there are 53 of them that you can take a look at. I want to look at like this one, like for example, Best Buy. Okay, so Best Buy's coming down. It could be a bigger move, and you can start to associate, maybe not, I mean, you can look at a lot of these different things, but that's a major gap right there. Low, 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 low. You're right at support. So could you bounce here? Question, could you break? There are some earnings coming up. It's just setting us up for maybe some interesting kind of moves. Now this is at, I think, almost the bare minimum number of squeeze bars. Very, very tight, but look familiar? Look at these little squeezes that happen right in there. You see the little mini flag developing? Right at the very, very end. How about this one? You see the little mini flag? Remember, this just highlights that the price range is compressing at kind of an extreme, is what it's saying. Bollinger Band within the Keltner channel, break. How about here? There was a lot there. Do you see the flag off the bottom? Was there a bigger move that followed this? That's what we're trying to pick up on here. And now we're just using the leverage of longer dated options with also managing that risk, defined risk. Folks, if you found this of interest, smash that like button. But I think there's a lot we can investigate here on these swing trades every week. I mean, there could be something that we could look at in terms of options, looking over a longer time frame. And in the meantime, folks, you guys have this scan in here to take a look at. So encourage you to do that and go through a number of these as well. And by the way, let's see, Mary has some in there, yeah, that look better in terms of options. And so that's what you can look at. But I'm just letting you know, with those longer price timeframes, even though you're paying for that much more, look how well you're able to kind of put time on your side better, as opposed to that 1 month or 2 month option. Some of those break evens are very small moves, comparatively speaking, to what it would be otherwise. And so it just gives us more time to let the trade unfold. That's the whole idea here. And wanted to do this today, folks, because it is tied in to where the market condition is at in terms of it too being in a sideways channel. And it just happens to be one of those areas where if the market breaks, you're getting so many of these that are, I mean, setting up. I mean, they also have a TTM squeeze, and it's rare to get this many out there. But these are companies all within the S&P 500, and they too are squeezing. But I just normally don't get. It's a rare event to see this. As you can see, look how much time went on the S&P 500. There were just little blips of this happening. So it's the market condition that's helping, I think, many of these stocks to also be in a consolidation range, because we're looking at it right here. Okay, there was a lot to go over today, and I tried, but hopefully I got the core points across. Really kind of the 4 to 6 month time frame, folks. The delta range, 0.6 to 0.7 on the call end. And then still today, you know, we're looking at those, putting ranges in there too, stops and limits. Of course, we can apply any other techniques that we use in this class, but we had to hit it. I mean, it's tied to market conditions. And so we'll see what does unfold, but you're getting so many of these. All right, everybody. Hey, it's been great being with you. And thank you, Brent, for helping out in the chat. And he shared that as well with us. Thank you for the scan. You guys have fun with that. Keep an eye on these, because there could just be larger magnitude moves building when you see this occur. So with that, have a great rest of the day. See you next time, all.